Welcome to The Spread. I'm Matt Rabel. The CFTC ordered Virginia resident Leonard J. Chipola to pay restitution for misappropriating funds from a trading pool that he had set up for investors. When I say he misappropriated funds from that pool, I mean he misappropriated pretty much the entire pool. Chipola was charged with fraudulently convincing investors to contribute to a pool for futures and options trading, accruing about $7 million. Only about $1.4 million of that actually made it to the pool, though. The rest went into business expenses. Well, apparently some of those business expenses including funding other schemes, including mail fraud. Chipola was sentenced to 121 months in federal prison, ouch, and ordered to pay $5 million in restitution to his victims. You may recall that earlier this year, the S&P 500 hit all-time highs. The VIX, which reflects the volatility of the stock market and is also known as the fear gauge, remained high, which implied a level of fear that didn't seem to mirror the sentiment of the market. Some analysts at Goldman Sachs proposed that the increased retail activity in single stock options, much of which centers around buying calls, may have pushed the VIX to heights that would normally suggest uncertainty in the stock market. It's an interesting theory and something to keep in mind while watching the market for the rest of 2021, though don't take that as investment advice in any capacity. I'm not Jordan Belfort over here. Keeping up with the theme of misleading information causing problems this week, the SEC is considering putting greater scrutiny on index providers. Commissioner Hester Pierce said this week that it's time to look at index providers to see if a regulatory framework is necessary, and if so, what it should look like. The comment came after the SEC hit S&P Dow Jones indexes this week with a $9 million penalty for publishing incorrect data. No bull market lasts forever, and that's as true for the crypto markets as it is for any other. This past week showed why. The price of Bitcoin crashed last week and has continued to drag. Frederick Collins, an experienced options trader and researcher at the blockchain data firm Glassnode, thinks that Bitcoin options traders may have contributed to it. Collins told CoinDesk that market makers were heavily short puts with strikes between $52,000 and $50,000. Since the price of the underlying suddenly became so turbulent, he thinks that they were forced to sell Bitcoin on spot and futures markets to offset gamma exposure. So I think there are a few things to consider here. I'm just gonna say right now and put some warning lights up. What I'm about to say is not investment advice and should not be construed that way at all. So Bitcoin is like the most volatile asset there is, unless you count like other cryptocurrencies maybe. To give you an example of what I'm talking about, T3 Index, who created the Spikes Index, they also created a volatility index for Bitcoin, which uses similar methodology to the VIX. The Bitvol hit 110 this week, and that's not even the highest it's ever been. Okay, like imagine if the VIX hit 110. Like it didn't even do that in 2020. And 2020 was crazy. If you invest in Bitcoin or have any kind of interest or stake in it, volatility is just part of the game. So I've seen a lot of people talking about how like Tesla coming out and saying that they're not going to accept Bitcoin as payment after all. Like that's the thing that caused this huge dip. And the reason that this CoinDesk story interested me is because the CoinDesk story kind of points out that there's never one thing going on, especially something as multifaceted as Bitcoin. So Tesla coming out and saying that they're not going to accept Bitcoin as a payment method despite the previous bullishness of the company for Bitcoin and the bullishness of their CEO for Bitcoin. Obviously, that bummed a lot of people out. Obviously, that undermined people's kind of attitude. I mean, buying a Tesla with Bitcoin it's like the most 2021 thing I could think of. But there are a lot of other things to keep in mind that happened this week as well. For example, the government of China came out and said that they were instituting just kind of a blanket ban on Bitcoin, which makes sense. They're working on their own stablecoin thing. The Chinese government tends to like the state-owned and created thing to be the only game in town. So, obviously that has upset quite a few people. China's a huge market, and making it harder for Bitcoin to exist in that market is obviously affecting the price of the underlying asset. And then there's also the Colonial Pipeline, which that was a big story this week, and it also reignited some discussions over Bitcoin's role in the criminal world and how it should be regulated and to what extent, because the hackers who attacked the Colonial Pipeline demanded Bitcoin in payment because Bitcoin's harder to trace. If you're a trader or you have stakes in Bitcoin and the market plummets, or the price of the underlying asset of Bitcoin plummets, obviously that's bad for in a lot of cases. But I just think it's important to keep in perspective that there's never, Tesla was not. It may have been a significant factor. It may have been it was probably a number of factors, but there's a lot happening in the cryptocurrency markets that are worth keeping in mind. Also, at time of writing, Bitcoin is currently where it was at the low point of February. And at that point, it was still 2.5 times, the price of Bitcoin was still 2.5 times what it was 6 months before that. So it's been kind of on this like gradual uptick. Some months are more or less gradual than others, obviously. But it's just worth keeping in mind that this is a volatile asset. Things are going to happen, and it's usually not relegated to one causal factor. What was the biggest factor? I don't know. I don't think anyone does. I think it's impossible to tell. So do what you will with this info. Just keep in mind that there are usually a few things affecting these things. We've got a new interview with Jim Navati and Ravi Jain from Sterling Trading Tech, another with the Small Exchanges CEO Donnie Roberts, and a third with the magnanimous Leo Melamed. Check those out at johnlothianews.com, and be sure to follow us on LinkedIn, Facebook, and Twitter, especially Twitter. We've got a lot of different Twitter handles for a lot of different things like options, markets wiki, and more. If you're watching this on YouTube, be sure to like and subscribe so that you can get notifications of new JLN videos as soon as they go up. And that's going to do it for the spread this week. So until next time, stay safe and happy trading.